Hello everybody and welcome once again to Tony Trades channel. Well, today we're trading the Core PCE Price Index month to month. This is the Fed's favorite inflation gauge. All right, so I'm going to quickly run you through the economic calendar that you can see, and the reason why it's the Fed's favorite inflation gauge is pretty much dependable on what occurs within the economy. Now, I'll be delving deeper. This release can whip USD pairs like you're going to see. We'll be focusing on all currency pairs that are correlated with the USD. That means gold. We'll be looking at some indices in some seconds. So I'm going to show you exactly how I prepare and how I actually execute, and of course manage risk. Don't forget about that, guys. And before we move any further, I have a quick gift for you. This is the pocket option promo code that you can use to get 100% bonus on your first trade. Please use it today or whenever you're trading. I'll drop another one at the end of the video. So hit a like, subscribe, and let's gear up. Please write in the comment section where you are tuning in from. It would be very nice to know where all of you are coming from. It is lunchtime over here, and it is morning in New York, so we are gearing up for that. Now, before we move any further, we have Core PCE coming in. What is the difference between CPI, which is Consumer Price Index, and PCE? So PCE is a personal consumption expenditure price index, right? What does it measure? It measures the changes for a wider range of goods and services consumed by all households, including those purchased by third parties. All right. What is very significant about this? Why is CPI versus PCE more important? It's because it's consumer based. Okay. PCE covers broader spending, so accounts for substitution. This is why the Fed loves it. I'll give you an example. If beef prices right now rise in your country or wherever you're from, CPI says, typically it says inflation is high. But PCE, it notices consumers switching, say, to chicken. All right? This is more accurate reflection of spending behavior. So we're just analyzing spending behavior at a micro scale. All right. Now, why the Fed prefers PCE? PCE is tied directly to the Fed's 2% inflation target. Remember, we're gearing up to that. So when we see Core PCE, it strips food and energy. It shows the underlying inflation trend. That is why this key indicator is quite important and very significant. So what impact does it have on the USD? So a higher PCE, in this case today, we are looking at 0.3%. So the forecast is balanced. If it's higher, it means that the Fed may hike or it stays hawkish, which is strong USD and equaling weaker stocks. Now, what do we have there? What's happening? Okay, now on the contrary, if we have a lower PCE, it means the Fed may ease. So drop a like if you think inflation will rise or it will drop. Okay, I'm not sure. All right, we have some people jumping in there. Wonderful. Now, you can use any economic calendar. We will look at this in real time. Another tool that I highly recommend is the Bureau of Economic Analysis from the official government website. he will be able to see firsthand the core PCE month to month, and will be able to dissect that in real time. Now, a pro tip for you all is if the core month to month misses, all right, but the year to year is sticky, then very important to note that the algorithms may fed the fast move. And here's how it works, all right? From this website here, the official website of the United States government Bureau of Economic Analysis, it publishes this analysis. It publishes the personal income and outlays report once a month, and we are waiting for it today. Inside this report, you get a headline of PCE month to month, you get core PCE month to month, and vice versa. You get for the year to year for both the PCE and core PCE. Plus, of course, personal income, personal spending, and revisions to prior months. So when traders say PCE release, they're looking at all four of these numbers, all right, at the same time. Okay, now don't just trade the headline, all right? If I open for you this economic calendar again, all right, where are you? So there we have it. If we check the calendar right now, we can see just 3 minutes left. So don't just trade the headline, guys. Always cross-check with year to year. In this case, we have month to month. And it's very important to identify if they conflict, right? The first spike in any of these pairs, I like to say, is pretty much fake. That's why I always wait for the second move, right? With confirmation before any kind of sizing up. Today we'll be using 2% as always, but I'll break that down into 4 bits, which is 0.5% for each of my trades. Don't forget, we're going to use the loss compensation system live so that you're able to pretty much gauge your risk appetite. Now, core PCE has 2 lenses, right? Let's look at that. If we're looking at the month to month, here we're looking at short-term pulses, right? How prices changed compared to last month. If you're looking at year over year, it's the bigger picture, the bigger trend. These are prices still much higher than a year ago, all right? So you're just comparing this year and last year. So traders and algos, they watch both of these parameters, and they prioritize different ones depending on the context. If you're a big time, long-term investor, then you have to look for the year to year. Now, the miss versus the sticky scenario. If you're looking at, say, suppose the forecast that we're going to have now is 0.2, all right? But the actual, say, is 0. Let's say for purposes of this example, if we have 0.4, but the actual is 0.3, then it looks like inflation is softer. That means the US bearish reaction will be imminent. While if you look at the sticky the sticky side, the year to year, you will be able to see if it's high. For example, if it's 2.9% versus a Fed target of 2.0%, inflation hasn't actually cooled in the bigger trend. Now, a very big one, I'd like to explain why algos always fail. Okay, algos fail. The initial algo reaction, let us use smaller time frames here. I'm giving you kind of a background sort of ideology or hypothesis that I like to use so that you have this at the back of your mind. These algos are coded to hit based on the headline versus forecast, all right? We have a headline, the algos work. But if month to month misses, USD dumps instantly. That's when you see the Euro USD spikes and gold popping. All right, there we go. We're having a spike there. Now, if we're looking at the FedWatch, okay, we have less than 4 seconds. So I'm not putting any trade now, but I just want to let you know we have this spike now. we're going to be using a stochastic on the lower time frame. So we'll be jumping into the 5-second time frame. We're not going to rush. We are not rushing, okay? There are many other indicators that I like to confirm with. So beginners, don't overread the whole press release, okay? The press release comes in, you have to refresh your page. There you have it. It's out, okay? And what do we have now? So we're looking at personal income increased by $112 billion, all right? That is 0.4% at a monthly rate in July, according to estimates released today by the US Bureau of Economic Analysis. Disposable personal income, DPI, has also increased by $93.9 billion. And personal consumption expenditure increased by 0.5%. Now, this is reflected on the economic calendar. As you can see, we have 0.3%. So it's neutral, but many novice traders don't read the report. So you will need to read this report and get some context. So in this particular report, this is for July, okay? You want to look at what's happening this month. Okay. Now, correlations. Once you've read the report, you need to look at correlations as well. You need to have a watch list. So get out your USD pairs. I will settle with GBP, USD CAD. I'll look for gold. I'll also look at Euro USD and the other indices. I want to draw your attention to a rule that I like to use, which is the 3 confirmations. So we have price on the pair, say GBP USD. We have another price on the DAX, which is an indicator for USD strength and yields. Now, if you're positioning, I also highly recommend checking out the CFTC quote disaggregated analysis, and I like to use bar chart. I've mentioned that many times. I like to focus on non-commercial large speculators, and I look for the detailed report. So in this report, you'll be able to see some of the instruments like metals, and the commitment of traders quote report shows how different traders are positioned in futures market. So very important, look at the futures market and understand that my focus is on non-commercials, right? We have commercials that are hedges. I've mentioned this. Please check out my previous videos. These are big companies managing risk. They often buy low, they sell high. You know, they're considered smart money and often contrarian indicators. Now, why I look at the non-commercial large speculators? These are hedge funds. Okay, we're looking at big traders. They trade for profit and they follow trends. So extreme long, short positions can signal market tops or bottoms. So go to your currency pairs and look for, we'll be focusing on GBP USD. So I want to look at the GBP USD. So look for it, look for the GBP. Where is that? There you have it, British pound. So when you look at the British pound, we will be focusing on the net long positions. Net long positions. As of August 19th, 2025, we have minus 25,000. These are shorts, okay? So if the specs are heavily net long, say on the GBP, the USD side is implicitly net short, and vice versa. In this particular scenario, we have the opposite. We have net short, meaning the USD is net long. I will break this down in detail, and if you'd like to get a video just on dissecting these commitments of traders' net positions, just hit me in the comments, and I'll make you one probably as we move forward. Alright guys, now having this in mind, having understood that the GBP is pretty much weak, we naturally expect the currency pair to drop. Alright, now that is one other extra confirmation that we have. The data that came out for the USD shows that we're having 0.3%, meaning nothing significantly has changed, but at the micro level we've seen increments, meaning the USD is stronger, right? So we have a stronger USD. We've identified that the GBP has net short positions, and that way we expect the price to drop. Now I want to map out my true ranges. We have structure. We need to get some kind of context for what's happening at the average daily range and the true range. So these are highs and lows. So what I do, I will map out my weekly high and my weekly low. Okay, we're having a little noise here, but that shouldn't really obstruct us. So we have we have a weekly high and a weekly low at 1.35295. I also want to say that looking from a weekly time frame, we can assume that the price is playing around equilibrium. All right, on a lower time frame, say the 30-minute time frame, price is pretty much, dancing around those borders. Now this is what you want to avoid. All right, the setup is you add the average true range for 14 on, say, the 1 hour, right? If you look for it here, we should be having that average daily ranges. Where is that average true range? So there you have it. The average true range parameters, I set that for 14. All right, so it doesn't matter what time frame you're using. It is down here, and as you can see, it's at the upper boundary. All right, now on the higher time frame, we are at equilibrium, while on the 30 second, yeah, let's keep it at 15 minutes. At the 15-minute, we are at equilibrium, which makes sense. The stochastic, I've released a video on this. Please go check it out if you're a newbie. The stochastic, I'll be using parameters. My inputs are 14 and 3, all right? Using the smoothing period of 3 as well. Now we are having the crisscross of the lines over there, as you can see, entering in the 20 range. This is an oversold area, but it's not really coinciding with my average true range. Now this might be a lot of information for you out there, but take your time and try to regurgitate it, try to digest it after, and check out my other videos. I explain all this in detail. The reason why I'm trying to hurry now is to catch the momentum that just came out. But since we have acknowledged that we had 0.3% being released, we will go slow. Now looking at other pairs like the USD card, we don't see so much movement because it's just pre-New York now. We are jumping into the real New York session, so we expect momentum continuation. Now, if you look at the GBP true ranges, what you need to identify, number one, is look at the prior day's high and low. Okay, map that out. Map out the weekly high and low, and then you have pre-New York sessions high and lows. If you have equal highs, lows, say these are pretty much testing liquidity. All right, now we have the 1 hour on the GBP. price is still in the middle. What is my logic like when I'm trading this? All right, if hot data hits, in this case we don't have any hot data, right? It was 0.3 as the forecast. If hot data hits, the price breaks prior day's lows and holds below on retest. This is very important. That's continuation probability. So it's you know, a combination of a few indicators. You can also pop in the RSI if your RSI, you know, you follow that religiously, but you only need 3 confirmations. And whenever we're trading fundamentals, please make sure you're not staying over on the weekend. Now let us plan a trade now, right? We're not getting any reactions, and so far on my live streams we have not lost, not even once. If you go and check all my videos, we haven't even lost one trade. So let me write you a plan. We have a consensus, right? Example here. Core PCE month to month came out at 0.3%. That is a tick. So we adjust the scenario, right? The scenario is, I have 3 scenarios. One is hot and the other is cool. We'll be looking at cool. If it's less or equal to 0.1%, the USD bearish bias. And if it's greater or equal to 0.3%, it equals a USD bullish bias. So I'm fully bullish on the USD. It means the USD has more strength and we should expect price to fall in most of these currency pairs. Now gold, I prefer shorting gold into prior day's lows. So if you look at gold, I would like to short this into the prior daily previous lows, and you have to map that out as well. Try to map all that out, and only then you could start your trading day. So I expect you to do this, say in the morning, with fresh eyes. You just jump on and go through all the scenarios that I've just laid out. The order types that we're going to be looking at are without taking you into the intricacies of how, what exactly to do, you need to avoid orders in the first 5 to 15 seconds, just like I've done. You saw that spike. You saw that spike from 1.34 all the way up to 1.346. Avoid that, all right? You need to monitor the spreads and the slippage. So let us see. Currently, we're still below the ranges, okay? So I will increase that to a 15-second time frame. 15-second time frame shows that we are just slightly below. So for breakouts, consider stop orders. As simple as that. If you're going for a breakout, just put a stop order only if the level is clean, all right? If you're looking for a retest, like in this scenario, we have kind of like a retest, use a limit order. You could say a sell limit order here. And that pretty much reclaims this broken level. Always deploy this before you even think of trading. This is very important. Now we're going into a live trade. How much time do we have? All right. So let us look at the real examples. 10,000, we're looking at 2%, which is 2%, which is say 200 backs. If you look at 0.5%, we'll be looking at 50 backs. All right, so 50 backs 4 times. That's all you need. 50 backs 4 times, and we'll be looking at say a 1 minute. I like to use 15 seconds. So whenever you see the option for 15 seconds, not available, it's pretty much protecting you. And to be honest, this is why pocket options, is one of my favorite. It kind of helps you make the right decision. So we could see we have 15 seconds, but pretty much that's because of the volatility not being as much as expected. So after mapping out everything, let us try to quickly map out the prior, let's see, the prior highs and lows. So let's see, 1, 2, 3, 4, 5. So look at the start of the week and at the end of the week, right? Now clearly price is way below, right? If you look at the average true range on the daily, it's in the middle. This true range picks up data from the past 14 days. So if you're not a guy who likes to draw a lot of things, indicators and using tools, you could just use the ATR. And I like to trade at the extreme sides, all right? I don't like to trade around equilibrium. I don't like trading around equilibrium. PCE data came out, and my entry plan will be putting limit orders for these breakouts. But in this case, we will just go in as the momentum comes. Now, we're not trading immediately. Why are we not doing that? It's because we don't have enough volatility at the moment, okay? But don't be surprised that will come while New York opens up, the New York session. And we will get that momentum that we need. Now, once you've analyzed all that, you're going to set your micro zones. I like to call them micro zones, all right? We had that spike. We had that little spike right there. Now, I'll be setting my stops just right out of that window, because we all know that the USD now is very strong. So all the confirmations have been done. My position sizes have been done as well. We are managing risk, so we will be breaking down that 1-2% into 4 0.5%, right? And that way we'll be able to capitalize on some of these trends. So some other extra confirmations that you might need, I'm running through all of them, because as we move forward with these streams, I will start to dig deeper in each of the strategies, all right? When the stochastic is way below the oversold zone, you need to avoid going short. However, we're getting conflicting loyalty here. We've identified for this particular scenario, the USD is stronger. We expect the GBP to fall and break below the 1.34. The average true range is still floating as well, heading towards the lower level, but the stochastic has tilted a little bit up, showing some strength. Now, this is where you need to look at prior month. You need to look at the same thing at the previous month. Look at the other confirmations, and only then you could break it down. Now, another one is bracket orders. I wanted to highlight, because I haven't mentioned this, many people keep asking me. The bracket orders are always preset, all right? You preset them with your stop loss and your take profit. So when the news comes in, sometimes news moves very fast. Like this range over here, when it just comes in, you cannot just do that manually. So you could have bracket orders and say partial exits. Partial exits, they lock gains at predefined targets. If you have, say, TP1, they trail the rest using structure. So these are swing highs, lows, or, ATR based. You could set a trailer as well. And that's how it's done, guys. Now, with all that background information, you can also look at the VIX. I like to use the VIX as well. VIX is when it's below 30, not so much volatility. And that is one extra reason why I don't like to stay long. In these times, you need to be pretty much a scalper. I don't expect you holding any fundamental trade. All right, you could only use it to facilitate your other trades that will come in. We're clocking the end of our stream. This has been a short but very impactful live stream where I'm just spilling out all the gems. But understand that every point that I've mentioned here needs to be analyzed once again. You need to study it, all right? Don't just trade. Understand why you're getting into positions. Understand your exit positions. Understand your entries, the timings. It's a Friday. It's a month end. Understand the seasonal tendencies. Look for correlations. Look for real true ranges. And of course, have the legacy commitments of traders at the back of your mind. Right, now let us see. If you look at the currencies, I like to look at the performance leaders. Bar chart is a nice tool. It's a nice website for newbies. It's free, you know. It's a very good analytical tool. Of course, you could get the premium or engage with other subscriptions that are out there, that are dedicated, like Moo Research. I like that as well. And use this to your advantage. Understand where we are. Now we have USD pairs are all significantly bullish, strong. While the GBP is at, we've had a change of 0.29. Okay. At, all right, 0.15%. Yeah, so there you have it, guys. Another additional confirmation that we are bullish on the USD. So once you've clearly sorted that out, you will have to simply wait. Okay, simply wait. Have your world clock beside you. This is another very important one. You want to have your world clock. Many of you don't even know which time zones you are in. Have a world clock. Understand your region very well. Okay. It's 5 minutes to 9 o'clock, and that is where the magic happens in New York, all right? London, it's getting to 2 o'clock. People are out of their, lunch breaks. Tokyo is nighttime. Amsterdam is also pretty much early. Have all this in mind and focus on the New York session. That is key. So what I'm going to do, I'm going to wait for this price to hit right below this on the 15 second, and I'll move up one step ahead on a bigger time frame, which is the 30 second. Notice how I say bigger time frame in this context. 30 second means nothing, to be honest, but for this particular scenario, we'll be playing in between the 15 second, 30 second, and the 1 minute. Now we have more chance of hitting the lower boundary. So a very nice trade for you would be having a sell order right below the previous slightly bigger time frame, which is the 1 minute. You have your sell order here. Look at the stochastic, it's turning as well. The average true range has room to the downside. However, the current candle is bullish. It is bullish. So you just hold your horns and put the right risk, and when the time comes, you press the sell. As simple as that, guys. It's not rocket science. It looks easy, I know, it looks easy, or I make it look easy, but there's a lot of background work going on here, right? Now that we've hit the higher boundary, move another step further. Go to the 5 minute. 5 minute is a equilibrium point, okay? 5 minute is an equilibrium point. Now this is a nice trade. What you want to do, you want to wait for the average, for the stochastic. You see how it's hitting the 80 level. Once price flips, you set the sell there. Let's see how that will go. So we've hit the 1 minute, all right? 1 minute, 1 minute time frame, and we should, oh my goodness, we should see price come back down. All right, we need to see price come back down. Remember, with your loss compensation system, you can do this as many times as you can, as long as you're in the right risk management model that you have, you will win long term. So simply wait. We have 20 seconds to go. We have 20 seconds to go, and we've hit the upper boundary. 10 seconds to go. So you just wait. It's a waiting game. Okay, there you have it, guys. $95. We have 4 more rounds. Reduce that to the 15 second if you can, and you can keep doing that until we hit the lower boundary. Go to the USD card and do the same. Okay, it is 4 minutes to 9. I want to stop here. I'm going live in my group, so join my group, guys. Don't forget to use the promo code that I display for your 100% bonus. We've had one successful trade. You've watched me do that. It was really nice. I look forward to seeing you guys in the next coming live